Good day everyone, I am Andrey Diaz and welcome to Accounting 101 where we try to make your daily accounting problems easier. Now, if you're new here, in the previous video, we learned about investments in associates. Ngayon ay itatry natin na i-apply what we have learned in the previous lesson to real-life problems. I am joined by my groupmates Ahlam Mambuay and Vallery Mahilum, so now let's get started. Now, for our problem for today, we have on July 1, 2021, San Luis Company acquired 25% of the outstanding ordinary shares of San Simon Corporation at a total cost of 7 million pesos. The underlying equity of the shares acquired by San Luis was only 6 million pesos. San Luis is willing to pay more than what the carrying amount for the following reasons. San Simon owned depreciable plant assets with 10-year remaining economic life with a current fair value of 600,000 pesos, more than the carrying amount. Next is that San Simon owned land with current fair value of 3 million pesos, more than its carrying amount. Next, there are no other identifiable, tangible or intangible assets with fair value in excess of carrying amount. Accordingly, the remaining excess, if any, is to be allocated to goodwill. San Simon earned net income of 5,400,000 pesos evenly over the year ended December 31, 2021. On December 31, San Simon declared and paid a cash dividend of 1,050,000 pesos to ordinary shareholders. Fair value of San Luis's share at December 31, 2021 is 7,500,000 pesos. Both companies closed their accounting records on December 31. Now, to present and answer question number 1, here is Ahlam Mambuay. Hello Ahlam!
Hi Mr. Diaz, thank you for introducing our problem. So this problem is actually an investment in associate which is governed under PAS 28, the investment in associate and joint ventures. So a quick recap about associate is that it is when an entity over which the investor has significant influence. Significant influence means that the investor has a power to participate in the financial and operational decisions of the investee. So in the absence of the contrary, in between 20% to 50% is considered to have a significant influence. So in this problem, our first question is that based on the given information and the result of your audit, determine the following. First is the total amount of goodwill of San Simon Corporation based on the price paid by San Luis. Okay, so it is important to bear in mind that we are computing in the side of the, or in the point of view of the investee and not the investor. So for us to compute the goodwill, we are to use the formula of excess of cost over carrying amount, which is now flashed in your screens. So you can pause the video and try to familiarize the formula and try to answer the question on your own before watching how I would solve the problem. So for my way of solving this problem, I would break down the formula so it would be easier for us to, or for you to cope up with the process. It would be easier for you to digest kung paano ba siya i-solve. So first is we are to compute the excess of cost over carrying amount, which is we would find the acquisition cost and the carrying amount of the investment acquired. So since we are computing based on the price paid by San Luis, our acquisition cost is 7 million. And then our carrying amount is 6 million, which will be deducted to 7 million and give us a result of 1 million of excess of cost over carrying amount. With the result given, we are to deduct the any undervaluated nga mga assets. So in the problem, as Mr. Diaz as read, only 2 assets has been has a fair value that is excess over their carrying amount. This is the plant asset and the land. So To compute for the undervaluation of the two assets, we are to multiply the percentage acquired by the investor, which is 25%, which by the way means that the investor has a significant influence. So 600,000 multiplied by 25% would give us a result of 150,000. Then for the land, 3 million multiplied by 25% would also give us a result of 750,000. These two result would then be deducted to the excess of cost over carrying amount, which would give us a amount attributable to goodwill equivalenting to 100,000. So question, is this the goodwill of San Simon? As I have said earlier that we are computing in the side of the investee, not the investor. So this result that we have here, the 100,000, is actually the goodwill of the investor. So to get the goodwill of the investee, we are to simply divide the goodwill of the investor by the acquired share, which is 25%. So 100,000 divided by 25% would give us a result of 400,000, which is in the choices is letter B. So yun lang siya. I hope you've understand the discussion. So for our next question, my teammate will introduce to you our second question, Miss Vallery. Please take it away.
Thank you, Ms. Mambuay. I will be discussing problem number 2, which is what is the net investment income from investment in San Simon Corporation. The choices are A, 662,500 pesos, letter B, 667,500 pesos, letter C, 675,000 pesos, letter D, 1,335,000 pesos. So in this problem, we are tasked to get the net investment income that the San Luis Corporation got from its investment on San Simon Corporation. So this is the formula used in order to compute the net investment income. Share in net income less share in loss and amortization of excess of cost attributable to depreciable assets and inventory. Share in loss decreases net investment income and the total is recognized as loss in investment if share in loss exceeds share in net income. In order to get share in net income, you need to multiply the percentage of shares acquired to the net income given in the problem. The same is used in order to get share in loss except you multiply the percentage to net loss instead. Amortization of excess attributable to undervaluation of depreciable assets and inventory also decreases net investment income, though excess attributable to undervaluation of land has no effect on net investment income since land is not depreciable, therefore not amortized. So here you can see the solution for this problem. As there is no net loss and undervaluation of inventory given, those parts are excluded. There is undervaluation of land given, but it is also excluded since it is not amortized. So the only included parts are share in net income and undervaluation of plant assets, which is a depreciable asset. As you can see, you multiply the net income of 5,400,000 pesos to the 25% of shares acquired. It is also multiplied by 6/12, which stands for the time included in the computation since the shares were only acquired during July 1, which means the early half of the year is not included in the computation. The result is 675,000 pesos. Excess of plant assets can be computed by multiplying the percentage of shares acquired to the fair value of the plant assets, as you can see from Ms. Mambuay's calculation. You just need to divide it by the remaining life, which is 10 years. Time included is also multiplied to the amortization of excess attributable to plant assets. So 600,000 times 25% divided by 10 times 6/12 results into 7,500 pesos, which is then subtracted to the share in net income, which is 675,000 pesos. So 675,000 minus 7,500 pesos results in 665,500 pesos. So this makes the answer letter B. For problem number 3, my groupmate Mr. Andrey will be discussing it.
Thank you, Valerie. Now that we have learned from the previous questions about significant influence, let us go to the third question. and it is the carrying amount of investment in San Simon Corporation as of December 31, 2021 is A. 7,405,000 pesos, B. 7,412,000 pesos, C. 7,662,500 pesos, D. 7,667,500 pesos. Now, before answering the question, let's look at what we have learned. So under PAS and PFRS, there are several values that can impact the carrying amount of an investment in associates. So here are they. So first is the initial measurement. The carrying amount of the investment is initially determined based on the cost of acquiring the investment. Second is the share of profit or losses. So the investor's share of the associate's profits or losses as determined using the equity method. Next is the share of other comprehensive income. So similarly, the investor's share of the associate's other comprehensive income affects the carrying amount of the investment. So OCI includes items of income and expense that bypass the income statement and are directly recognized in equity. Next is the dividends received. So the dividends received from the associate reduces the carrying amount of the investment. When the associate declares dividends, the investor deducts its share of the dividends from the carrying amount of the investment. Next is the impairment losses. If there are any indications of impairment, the carrying amount of the investment is reviewed for potential impairment losses. So lastly is the changes in ownership interest. So any changes in the investor's ownership interest in the associate can impact the carrying amount of the investment. For example, if the investor acquires additional shares or reduces its ownership percentage, the carrying amount may need to be adjusted accordingly. So, with all that said, manonotice natin that there are three actual present factors that would determine the carrying amount of the investment sa problem natin. So, those are the initial measurement, the share in income, and dividends na na-receive. Now, based on the previous slide, we know that share in income will be added to the carrying amount of the investment, and it was also computed na in the previous question. Katong gi-compute ni Vallery. Now, we need to know the amount of dividends to be deducted. Ngayon, the formula for measuring the dividends of associates to be deducted from the carrying amount of the investment is as follows. So, dividends to be deducted is equal to investor's ownership percentage, that is 25%, times dividends declared by the associates, which is the 1,050,000 pesos. So, this formula will then give us a total of 262,500 pesos. So this will be deducted in the carrying amount. Now, to finally answer the question, here is how the carrying amount for San Simon investment is computed. So first is the initial measurement, which is the acquisition cost of the investment. So the value is 7 million pesos. So given na. Next is added the net income, which was computed by Vallery in the previous question, which is 667,500 pesos. And finally, deducted is the share in dividends, which was computed in the previous slide. So the value is 262,500 pesos. So this will in turn give us a total of 7,405,000 pesos. Among the choices, our answer is letter A, which is 7,405,000 pesos. At last, we have finished our accounting problem for today. All of us in Accounting 101 hope that we have given you guys a substantial amount of knowledge kahit papaano. Thank you for watching and see you in our next video. Bye-bye!